Good morning and good afternoon, depending where you are. After a couple of years that have been extraordinary times for aviation, is it possible that we're finally turning a corner and something closer to what we used to think of as normal travel patterns are returning? Since last hosting the webinar, I've flown for leisure and for work, and many of those around me are doing the same thing. We hear stories in the media of airports being full of passengers again, and you never know, maybe in a couple of months' time, we'll be talking about on-time performance and the problems caused by congestion again. Maybe that's some time off. But today we're going to be looking at some of the evidence for whether travel confidence might finally be returning. We'll have a look at the latest OAG data to see where different markets are in terms of recovery. And we're going to have a look at the effect of overflight restrictions on Russian airspace. And we'll also be looking ahead to the summer to see how bookings are doing. I'm Becca Rowland, and I'm a partner at Midas Aviation. And I'm joined this morning by a couple of real experts in Asia-Pacific aviation and travel. And they've both been previous guests on our webinars. So welcome, Gary. Gary's Director of Check-in Asia, travel intelligence firm with bases in Hong Kong, Shanghai, and Kuala Lumpur. And he's co-host of the Southeast Asia Travel Show. Gary, you're currently visiting the UK, aren't you? So you're joining us probably from somewhere up the road from where I am, I think. When I said earlier we're going to be looking at evidence, I guess some of that can be anecdotal evidence. And I know you've been writing about your experience of having got out of Kuala Lumpur for the first time in a while and come to the UK.
Yeah, good morning, Becca. Good morning, John. Good morning, Jen. Yeah, absolutely. I'm in Oxford, just like yourself, Becca, and it's my first trip internationally for nearly 2.5 years. I flew from Kuala Lumpur International to London Heathrow last Thursday night, Friday. Leaving Kuala Lumpur was a little bit busier than expected, but still, you know, the flights are still to develop their momentum. But coming into Heathrow, yeah, I've not seen anything quite like that. Terminal 2 at early morning on Friday was it was chaotic. It was like arriving at Wembley Stadium.
Goodness me. Anyway, well, I'm sure we'll hear more of your anecdotes and your evidence as we go through this morning. We've also got Dr. Cheng Li with us, joining us from Australia. Cheng is the founder and president of the Institute for Aviation Research and a specialist in Chinese air travel. Welcome, Cheng. It's good to have you back. And I believe you're hoping to get to China too for the first time in quite a while, aren't you?
Yes, Becca, you're right. All right. Yeah, I think the last time we went to China was, I think it was still January 2020, over 2 years now. Yeah.
Yeah, so you're looking forward to it?
Yes. Yeah, still got my family in China. Yes, I always wanted to go back and visit my family and also, you know, many friends there.
Yeah.
But, you know, yeah, but the border being tightly closed. Yeah.
Yeah. Well, I'm sure we're going to get more of your thoughts about what's going to happen with Chinese travel as we go through this. Thanks to both of you for joining us. And we also have John Grant, as always, OAG's chief analyst in residence. John, your weekly blog for OAG was particularly upbeat this week.
Yes, morning everyone. Yes, I don't know if it's because it's summer or just there is more optimism around. I've travelled as well to Croydon and back, so you know, nowhere near as exotic as you. But yeah, I really do sense that you know, we've had a breakthrough. There's more stability and there's more confidence out there, despite all of the challenges of operations and crew resources, etc. It's beginning to look a lot better.
Good. Well, let's move on, as we always do. Please, if you're listening in, do use the chat area for questions, and we will try and take questions, as many as we can, as we work our way through the webinar today. So this is a slide. We've shown this sort of information plenty of times before, just showing where we are in terms of recovery of global capacity, with a dotted line showing future weeks ahead. John, do you want to talk us through this? Are we going to see 2022 capacity reach the 2019 levels at some point, do you think?
No.
Okay, that's an easy answer.
Yes, I think it's very, very unlikely for many reasons, not least of which there probably isn't enough aircraft capacity available to achieve that at short notice in the next few months. but more importantly, you know, a lot of airlines have made some pretty sensible decisions about their capacity management for the summer, and just cannot bring additional resource back into their networks throughout the next 3 or 4 months, and are playing a game of revenue management, maximizing load factors, maximizing yields, and hopefully maximizing revenues and profitability after 2 absolutely awful summers past. We know that on a rolling 3-month basis, about 11 million seats get removed week on week, which sounds dramatic, but actually compared to the last 2 years is almost a stable position. So that's good. The thing that we don't see here, and we'll talk about it in more detail, I'm sure, is that 88.6 million excludes about 5.5 million additional seats that were operated in China this time last year. So if we were not having the latest range of lockdowns in Shanghai and other Chinese cities, we'd probably be nearer to 95 million. And that type of capacity in China historically has come back very quickly. Once pandemic events have passed, our experience is that it comes back quicker.
Go ahead.
Yeah, I was going to say, but another notable factor is, and it's interesting in the context of places like Vietnam. This time last year, they had lots of domestic capacity because they were operating the airlines trying to keep revenue generation and just keep cash flow moving. Now they are beginning to operate longer sectors into Southeast Asia and into neighboring countries. That means the actual level of capacity production is slightly lower because they're operating longer sectors and they can't squeeze as many flights into a 24-hour window as they previously did. So there's lots of change in dynamics taking place at the moment that make me think 88.6 excluding China, perhaps we might get to 98 or 99 million at the real peak in July if China has come back.
Right, and we've got a little bit of a sort of a boost here in the next few weeks, but actually that's China as well, and we've got some slides which show this, don't we? That the Chinese are taking capacity out really just for the next couple of weeks, and then at the moment the schedule a few weeks ahead is higher than we think it will operate, just because they haven't addressed the capacity in the schedule a few weeks out. So this dotted line will come down a bit as China takes out capacity, won't it?
Yeah, absolutely, yeah.
Interesting. Well, let's have a look at some of the regions in a bit more detail. These lines here are each different regions, and we take China out of Asia because it's such a distinct market and so large. And again, the dotted lines are that period in the future. So we're showing the data here by month. So you can see China a bit all over the place. But the rest is, this is versus 2019, the same month in 2019. Elsewhere, we're seeing each region getting closer, aren't they, to where they were?
Absolutely. I mean, you know, they're all edging in the right direction. By taking China out of Asia, it highlights those country markets that continue to struggle, but they're dependent on China anyway. So the two are sort of linked, and I'm thinking of places like Japan, South Korea, and Hong Kong, which is still in a desperate situation in terms of capacity. But most markets are now moving in a really positive direction, and that's why I feel optimistic about the summer and beyond. You know, it's remarkable how much capacity has been added back in a 12-month period, and for all the sensationalist headlines from journalists that we see in Europe at the moment, no industry could accommodate a 400% increase in capacity, which is what we are seeing in Western Europe in a 12-month period, when you know, resources have to be retrained, they have to be re-cleared for security. There was absolutely no clarity or guidance from governments when they were going to open or attempt to reopen their international borders, and when they did, they imposed ridiculous traffic lights that failed to work, or got stuck on red and never moved to amber. And you know, it beggars belief that people don't understand how complex this industry is, and the fact that we've got to rebuild resources and skills and talents that were lost 2 years ago. It doesn't happen overnight.
Yeah, definitely. I can't say more on that one. Let's have a look at a few of the Asia Pacific countries and see where they are now. Just recently, Gary, Singapore and Thailand, which we show here, both of them, they've indicated they're reopening, haven't they?
Yeah, so we've started to see some of the restrictions in terms of entry into both countries removed. Thailand has made a big decision to remove its on-arrival PCR test. Singapore is removing all testing, so it's now much easier to get into both countries. There are still some restrictions that visitors do have to be aware of when you go to Thailand. You still do have to apply for your Thai pass, but it is certainly much easier than it was 2 months ago. That's great news. That's been received very, very strongly across the region. I think just going back to your last slide there, Becca, April has been a really important month across Southeast Asia for a number of reasons. Certainly those two reasons that you mentioned there in terms of the removing of restrictions for Singapore and Thailand, that's really lifted the whole region, lifted the whole market. But there's also, April has been a very, very strong month for domestic travel. We've had a number of festivals this month. We had the traditional New Year celebrations in Thailand, Cambodia, Myanmar and Laos. We had Holy Week in Philippines. We've got the Vietnam Reunification Day holiday coming up. And in Indonesia and Malaysia, we have Eid, you know, the celebration of the end of the fasting month of Ramadan. Now, these are really important travel periods. But if you go back over the last 2 years, they were either heavily curtailed or in some instances, they didn't even actually happen. So for these to be happening now, for people to be traveling domestically is really, really important in terms of rebuilding confidence to travel, initially domestically, but also, you know, that will feed on into international markets. So April, I think when we look back at the end of the year, I think we'll look back at April as a very, very pivotal month in the region.
Yeah. And so this is it. The charts here I think are interesting. The grey lines are the 2019 figures, the domestic, and yellow is international, and then the dotted line is 2019. So we can see Australia domestic travel is right up where it was, Vietnam exceeding where it was, as John commented earlier, but probably some of those flights now moving towards being allocated on international routes. What about Hong Kong? I mean, international travel has just been, you know, it's flatlining really, but there are indications it's opening a bit now, isn't it?
Yeah, I mean, it bottomed out, didn't it? I mean, it reached the point where, you know, it was being described as being off the map, off the chart of international travel. It did, you know, it got hit very badly by Omicron. It has had problems with its vaccination rate, which made the peak and the spike of the Omicron infection much higher. More people were dying than was expected, but it does seem to have crested, and it does now seem to be on the downward slide from that peak, and so it is starting to reopen some flight routes. But you know, there are still restrictions getting in and out of Hong Kong. It's not going to be easy for some time, but you know, in terms of what John's saying, you know, it does look as though there's at least some glimmers of hope there. And as we move forward for the rest of the year, you know, we've got to hope that Hong Kong is becoming much more open for flights around the region.
It's lost its credibility for many passengers as a potential connecting point, though, hasn't it? It was pre-COVID, it was struggling with the civil unrest in the late second half of 2019 anyway. And Cathay are now unique. They are the worst performing airline in terms of capacity recovery amongst all of the majors in the world. They still only have 25% of normal capacity running, and you know, their network was probably more dependent on China than any other airline, and they're suffering the consequences still. Must be a really frustrating situation for them. They had a strategy they were about to adopt. They'd acquired a low-cost airline. They'd absorbed Dragonair. You know, they were getting ready for some grand plans with the third runway, and suddenly it's all been pulled underneath their feet.
Yeah, immense problems, and we've seen in recent months, the number of people leaving Hong Kong and relocating elsewhere in the world. Businesses are doing that as well. A lot of businesses, temporarily perhaps, but maybe for the longer term, moving to Singapore. So there's immense problems there, economic, structural, everything. You're right, John.
So as we go forward, are we going to see? I assume we'll see Singapore gain at in contrast to Hong Kong. And, I've typically thought of, I'm sure many others have as well, as Singapore as a connecting place where Hong Kong was a destination. But I understand Singapore's trying to reposition itself as a bit more of a destination in itself. This is a place you would go on holiday. And so are we going to see Singapore go from strength to strength after this?
Yeah, I do. I think Singapore is very, very forward-looking in the way that it actually presents the small resources that it actually has. It has a pretty diverse economy. I mean, I agree with you that it is a very much a connective point. We all know that. But you look at its business, its meetings and MICE economy. That's very, very important. It has great resources there. It's a big flying cruise venue. It was before the pandemic. Americans and Australians and Southeast Asians and Chinese flying into Singapore to jump on cruise ships, spend 2 or 3 days in Singapore before or after the trip. So it's not a long stay. You're not going to stay in Singapore for a long period of time, but as a stopover and the things that you can do before you do other things. Singapore has a lot to offer, and it's very creative in the way that it markets itself as well.
I think economically it's interesting, isn't it? Because stopover traffic, if it's developed correctly, probably has a higher economic impact than a 7 or a 14-day holiday maker, because you spend more because you're there for a short period of time, and you cram a number of events and sites into a shorter period. So and that may include doing as many rooftop bars as you possibly can, Becca, in a short time. But that's in some ways, stopover traffic can be really good if it does stop over for 2 or 3 nights and provides positive revenue for the economy.
Yeah,
I agree.
And the change in entry requirements is really important, isn't it, in these markets? Because a lot of the regional travel is quite short. There's quite short trips, aren't they? We're not talking about 2-week holidays. We're talking, 4 or 5 days perhaps. And so taking time out to do testing, potential quarantines, all of those things make a massive difference to that, don't they? So making this entry easier it really has an impact here. But I'm interested, Gary, as well, about where you think these markets will go going forward. I think you said to us yesterday you think Thailand will do really, really well, and Bali. But there is some concern about sort of currency issues and Asian travellers being quite cautious about things like that. Do you want to give us a sort of flavour of how you see sort of regional travel happening over the next little while?
Yeah, I mean, forecasting is difficult at the moment. Thailand, I think, will do well. It's Thailand. It's the most visited country in Southeast Asia. It does tourism better than everybody else. It's got such a diversity of experiences and islands and foods and all those things. Thailand is Thailand, and the demand will come back now. It's much easier to travel there. I don't think there's much doubt about that. We can chart that across the rest of the year as well. You look at a bit of seasonality in terms of everybody now will be looking at the back end of the year. Are we going to see? John mentioned this yesterday. One of the issues we're seeing right now is short booking windows. Now, Thailand would be planning ahead right now to get its bookings in place for the summer holidays and also for the peak period, which is going to be November through March next year. But at the moment, we don't know how far out people are going to book. But in terms of Thailand, yes, I don't see there'll be much problem. It's not, of course, going to hit the heights of 2018 or 2019. It's not going to get anywhere near that, but it will develop quite strongly. Vietnam, I think, is struggling at the moment. You look at the media at the moment is reporting that if you go back to 2019, I think 67% of its total visitors came from 3 countries, and that was China, Japan, and South Korea. Jung will tell us more about China. The Japan market isn't really happening in terms of outbound at the moment. Korea is. South Korea are starting to book for the summer, but at the moment, those bookings seem to be into Europe and also into the Philippines, also Vietnam. It's a popular destination. So I think those two. Malaysia is a little bit of an unknown. It started much later than everybody else. It didn't open its borders until the beginning of April, so it's playing catch up. Everybody is going after the same markets at the moment. Without China, everybody is trying to market into the same source markets. So India is very popular, the Middle East, Australia, and of course intra-ASEAN travel. You know, I think we have to look over the next few months at marketing to neighboring countries. That's going to be very, very important to drive traffic around the region.
So we're going to look at China in a little bit, but it'd be good to bring Cheng in at this point. Obviously, all of these countries were hugely dependent on Chinese outbound travel. Have we got any more sense of when China might open up? What are your thoughts on that, Cheng?
Becca, yeah, that's an interesting question. I think the COVID situation in China appears to be quite serious. As you mentioned, Shanghai, has been under lockdown for 5 weeks now, and it seems that Beijing, may lock down, and so in terms of reopening up, I think it looks like it'll be unlikely this year. Possibly we are looking to next year, 2023.
It's a long way off, isn't it, still? But I think that's what we've been expecting for some time now, that we're not really going to see China open till 2023.
Yeah, that's right. I think the key issue is that China has been implementing a zero COVID policy, but this policy appears to be it's quite tricky when dealing with Omicron. It previously worked with their Delta variant, and the Omicron appears to be quite difficult to be contained in China. So the government has put in lots of resources to try to control the spread of the Omicron. But let's see how effective the policy is.
Yeah, they're not quite like the UK, are they, Gary? Your experiences coming back to the UK has shown you where everything's open really, and we're living with Omicron, aren't we now?
Yeah, and just as an adjunct to Zhang's point, I mean, I absolutely agree with what he said. I was speaking to the CEO of a big DMC in Beijing last week, and they do a lot of corporate outbound travel. So they host meetings overseas, they take incentives groups, they do ministerial groups, big international outbound from China. And he said an interesting thing, that even if China opens, say it's at the beginning of 2023, a lot of these events that they manage get booked 3 to 6 months out. The Chinese corporate groups don't like to travel in the first 3 months of the year because it's Chinese New Year. So you're really looking, even now, at the second quarter of next year, which would mean pretty much 3 years without outbound travel from China, which, for our region is that's significant. There's irreplaceable really for the Asia Pacific region.
I think another factor that Becca, you touched upon when we were traveling is that the Chinese have stopped issuing new passports. And if you've got a 10-year passport, and even on a normal rate of churn, if the country has been locked down for 2 years, that's 20% of passport holders who would have needed to have renewed their passports and have not been able to. So there's going to be a whole queue of people waiting to get their passports reissued. And that's going to take time. So even if a date of the 1st of January is announced, Gary, I agree. I mean, it's going to take them probably 5 or 6 months to get any sort of noticeable volumes back into the wider marketplace.
Yeah, it's interesting, isn't it? I always find it fascinating that things like that, like passports, you don't pay much attention to issuing of passports, and then something like this comes along, and actually you realize it can have a material difference on who travels and when.
Yeah, I mean, there's another issue as well, just very quickly, Becca, is that the economic circumstances in China are a little bit difficult as well at the moment. If you look back over the years before the pandemic, China supported its currency very well. It was a strong currency, and that drove a lot of traffic because people traveling overseas from China had a strong currency in their pocket. If that's not the case in a year's time, how will that impact travel flows? I guess we have to wait and see.
And also the economic impact of what's happening in China and elsewhere is going to have an impact on how much disposable income people have, isn't it?
Yeah, sure.
A lot of so despite John's optimism, there's still lots of concerns out there about the future. I'm going to move on to another slide. This is a slightly different look at data. We've pulled out some data for capacity data for a number of routes within Asia Pacific, mostly Southeast Asia. We were having a conversation ahead of this webinar about whether we're seeing airlines gravitate towards sort of main routes and the type of routes that have got demand at the moment. You know, are we seeing a sort of a pylon for routes where there's traffic and more airlines operating? And actually, the evidence shows that that's not really the case. We've got some routes here, Bangkok, Phuket, where we're seeing 8 carriers operating this April compared to 4 3 years ago. Bangkok, Delhi, we've got a couple of extra airlines operating, but other routes, Kuala Lumpur, Singapore, we've reduced by 3 airlines. Is that what you expected, John, to see?
I think it reflects where the market is at the moment, Becca, where airlines are still extremely cautious, and that's one of the really noticeable differences between the European recovery that we're now witnessing and what we're seeing in Southeast Asia and further afield. That there's a much more cautious approach taking place there. It's so they can't believe they really have reopened, and you know that the recovery is underway. And some airlines have obviously gone and unfortunately failed or ceased operations, and others are being a lot more cautious about when they do come back. And you know, Kuala Lumpur to Singapore would be a great example. I mean, did it ever really need 10 airlines to be operating what is no more than a 40-minute flight? You know, it was either blessed or burdened with too many carriers with too much capacity. And even now, seven airlines operating is excessive. And most markets around the world, probably, however large they are, have no more than 3, maybe perhaps 4 carriers operating between 2 city pairs. So it's a bit exceptional that we did get to 8 on Bali, Singapore, and Kuala Lumpur, Singapore. But we also have to factor in, of course, that some European airlines use those types of routes for fifth freedom traffic rights, which allows them to operate between 2 countries at the end of a long sector, essentially. So allows them to utilize an aircraft, fly some hours, generate some incremental traffic to their final destination. So no, it doesn't surprise me at the moment. It may change in the future, of course.
So one of the things that's interesting here is that a couple of domestic routes we've got there have much, you know, capacity is much closer to where it was 3 years ago. But then looking at Singapore, Sydney, 15% down. That seems like it's got a lot of capacity there at the moment, hasn't it? And we've got A380s coming back to that route as well, haven't we, soon?
Yeah, and that is exactly what's going to happen. I mean, we'll see Qantas bring back in June their service to Singapore and London Heathrow with the 380. So that'll put more capacity back on Singapore, Sydney. Singapore Airlines are already doing a combination of 380s and 777s on the route. So it will, you know, that's gonna come back. And I think one of the interesting ones is Bangkok, Phuket, where with the sandbox experiment in Phuket, many airlines actually operated from Western Europe non-stop to Phuket first, because that's where the market was able to offload and enter safely and within a controlled environment, rather than have to go into quarantine in Bangkok. So they all flipped their services into Phuket and then on to Bangkok. And that will probably change now that Thailand has removed most, if not all, of its restrictions.
Great. As I said at the beginning, if you've got questions, if any of the information, the data that we're showing you makes you have a think, oh yeah, what about so-and-so? And you've got a question, do put it in the chat area. We'll try and answer it as soon as we can. We're going to move on now and have a look at the impact of the restrictions on Russian airspace. So when European carriers, Europe banned Russian airlines from flying into Europe, Russia then banned European airlines from Russian airspace. So this is a really, this picture here is sort of playing with the fact that the globe isn't flat, really. And what we've done is shown what's happened to the Finnair routes between Helsinki and Asia. And the routes to South Korea and to Tokyo are now going over the North Pole. So on a map like this, it looks like this very circuitous route. But the upshot is that we're seeing Finnair routes with about an extra 3.5 hours on their flight time. The Southeast Asian destinations from Helsinki, they've added a little bit less. And as we move to airlines operating from points further west in Europe, the change to the flight times is much less, and some of them have seen almost no change to flight times. A tough time for Finnair in particular, isn't it, which had made a real point of connecting Europe to Asia.
Oh, it's horrible. Your competitive advantage, which is all about geography, is completely wiped out. And it makes it harder. You're now asking people to backhaul from Western Europe into Helsinki and then connect back over where they've traveled 5 or 6 hours earlier in some cases. And for Finnair, it's a really, really frustrating situation. You know, they've acquired the A350, they've relaunched a new business class product. They had ambitious plans pre-COVID for more Chinese points and to serve most Asian markets double daily, and it's all been pulled away from them. The extra 3.5 hours added to a flight might, be an issue in terms of operating cost and fuel burn, but as some of our slides in a few moments will show, the impact in terms of crew resourcing, aircraft integration, number of aircraft you need to use to fly to these destinations and still hit your connecting banks back in Helsinki is significant. And I know recently Finnair announced that they could provide no guidance on their financial results to the year end because of the uncertainty they face. For many other Western airlines, there are alternate routings available. And at this time of year, quite a few would route through Southeastern Europe and across the Indian subcontinent. It's as broad as it is long, and it would be, a daily decision based upon the trade winds and prevailing air currents. But it's really difficult, really, really difficult.
So obviously, as we've just spoken about, China is closed effectively for international travel now. I know there are some flights going back and forth, but as and when it reopens, the Chinese airlines don't have these same restrictions, do they? So what do we think that they might do as and when they open? Obviously, it's all speculative because who knows where we are in terms of Russian airspace in a year's time. But will this strengthen the position of Chinese airlines chain, do you think?
Becca, can I think this actually will give Chinese airlines quite a lot of advantage because they can still fly over Russian airspace. And say, if China reopens up its border, say Chinese airlines may, they may add quite a lot of capacity onto European markets. And because, compared with the European counterparts, flying with the Chinese carriers can save around 3.5 hours. So they may have, time advantage and also cost advantage.
This will be a fascinating situation for the Western European carriers. Do they actually, given what's happened in the last couple of years, want to go back to China in such a large way? The corporate demand for travel is less than it was 2 years ago. We know that it's anywhere between 20 and 30% seems to be the thinking at the moment, down on 2019 levels. And routes to China had a high proportion of business passengers. But for those Western airlines, the cost of operating through Russian airspace is exorbitant. And it's not going to get any cheaper. The Russians will probably put their rates for navigation charges up even higher than they have been for Western airlines. And they charge differently for different countries. So let's not forget that. And if I was Lufthansa and I was KLM, I'd be asking the question, do I really need to fly to secondary cities in China non-stop? Would I be better letting my Chinese partner airline operate that route instead on a joint venture basis? And I will fly my A350s or 777s to other long haul markets that are in Southeast Asia or perhaps even North America and Latin America. So I wouldn't be surprised if we see Western European carriers thinking long and hard about their future Chinese networks, given their partnerships and given the cost of overflying Russia, if it ever becomes an alternate route in the future.
Yeah, really interesting. Let's we've got a similar slide to this. It's just presented a little bit differently, and I want to thank Petri Vuori from Finavia, who I spoke to last week because, or the week before, because we were going to try and get him on the webinar today, and he heads up the route development for Finavia. So this slide he passed to me from Eurocontrol, and it looks at not just Helsinki but 3 other European airports, and just shows how the flight times have changed to various destinations in Asia. And you can see with the far right here, the Helsinki one, just how much more impact it's had on Helsinki than Amsterdam, Copenhagen, or Frankfurt. Not to say that there's been no impact for these other airports of the inability to fly over Russia.
Yeah, it's pretty stark, isn't it, when you see lines like that for Helsinki?
Very hard, isn't it, when you've built a competitive advantage around a particular thing, you know, and that's effectively that's gone. And the reason it's gone, I'm going to move on to the next slide, is if you look at the way aircraft rotations were from Helsinki to, this is an example of Tokyo. In the previous world, it was a really neat rotation within a 24-hour period. You could leave Helsinki and be back at Helsinki within 24 hours. And now the extra time and the way that it then means they have to have an aircraft on the ground in Tokyo, and they come back in time for an early morning departure wave at Helsinki into Europe. They've got a 35-hour, 15-minute rotation. I mean, it's unimaginable, isn't it, really, John?
It's destroyed their business. There's no other way to describe it. You know, these were really neat aircraft operating programs, great integration onto connecting waves and all of the services around there as well. And now, essentially, to put another 30% block time on a round trip is madness. And you know, the consequence of that is and it's a big if because they're not going to do it, Finnair had or were going to operate the same schedules as they did previously, they probably need another 7 or 8 wide-bodied aircraft to accommodate that schedule. And their business model and their revenues and their cost will be completely blown out for minimal revenue gain. That's why Finnair at the moment are, you know, leasing aircraft to British Airways, leasing aircraft to Eurowings, and anyone else who needs short-term capacity because their resources have been hit because of other reasons. Finnair is the carrier of first choice at the moment. You know, they have aircraft and crews available.
Mm-hmm. Okay, so one of the impacts, and we've just touched on this very briefly, we didn't really talk about it, of this is the extra cost, which is exacerbated even more by a rising jet fuel price. So this chart on the left here is taken from the IATA website, and we just see how much jet fuel prices have risen in the last couple of months. I mean, we know that anyway. We know that fuel prices are a massive part of the airline cost base. If you're going to add a third to your operating flight time with fuel prices like these, it's really, really tough, isn't it, John?
It's extremely challenging. Many of the major legacy airlines will have fuel hedged, and I think Cheng was saying yesterday that, you know, Cathay Pacific seem to have done a very good fuel hedge that's protected them to a degree this time around.
At the point when they haven't got anybody flying.
Absolutely, which is slightly ironic in that they're not operating many services, and even more ironic in that their last 7 or 8 fuel hedges have cost them not millions but billions of dollars. To call it right when there's no market is a really good call. But it's all right having hedges at the moment, but when these airlines are going back into the market looking to hedge again, they're having to hedge at really high prices. And do you do that, or do you hope that the price of fuel is going to come down in the next 5 or 6 months? It's a challenging time to be a procurer of aviation fuel for an airline. But the impact then comes through to some of the data here, Becca, on fuel surcharges.
Yeah, so we've had a question from Olivia Salmon. Have you seen airlines adding fuel surcharges or increased ticket prices to recoup fuel costs? Yes, we have. And this table on the right, I've just pulled out a few of the fuel surcharges I've been seeing on a selection of flights taken from the ITA Matrix Airfare search facility. So some of these, especially the transatlantic, we're seeing fuel surcharges of €250, £250 even, or £240. So quite significant fuel surcharges on the transatlantic, but they are coming in elsewhere as well, aren't they, John? AirAsia introduced fuel surcharges in March. I mean, they're a bit more modest, I think, in terms of the scale of them. And I think last week we saw Japan Airlines put some fuel surcharges in place, haven't we?
Yeah, we have, and there will inevitably more to follow. I think your ability to impose a fuel surcharge is reflective of the strength of the market at this moment in time. So, transatlantic capacity is really, really tight for this summer. And you can see that even in the airfares, a £900 round trip airfare for Heathrow, San Francisco in July is higher than you would normally be paying because there is just so much demand out there. But Gary, I mean, in Singapore, and it's just not possible. The confidence isn't there. So airlines can't put these charges back in, can they?
No, I mean, Becca made a good point there that AirAsia was one of the first airlines in the region to introduce its fuel surcharge. But as you said, it's at relatively modest rates because it's rebuilding. The region is playing catch up in terms of air capacities, air travel. It's still fragile. As we know, even at the best of times, Asian travelers are very cost sensitive, very value driven. And at the moment, when you're making, the frequency of trips isn't there anymore. So people are actually probably only going to be taking maybe one flight or one trip this year. And the impact of cost will certainly make an impact on the destination choices for sure, and the airline choices. How this is going to get worse, I think that's an issue right now, is the booking windows, as you said, John, are very, very short. If you're looking to book ahead, do you want to book now? Well, prices are as they are right now. Will they get higher later in the year? Customers have got big choices to make and difficult choices to make without, with the information is changing all the time.
And though we can see the fuel surcharges, to the passenger, that's not really visible as a fuel surcharge, is it? Usually, it's just a higher ticket price.
Yeah, exactly.
Yeah, you need to, this website here, ITA Matrix, which is a company owned by Google, actually breaks the fare down into its constituent parts. So you see what is notionally the airfare, then you see all of the various taxes and the charges from the airports, and all of the add-ons that go to build to a fare of £900, for example, including fuel surcharges. So it's very useful. But you can't book on it. So it's a great source of information, but it doesn't actually allow you to book. It tells you where you can then go and book that flight though. So yes, good site for people like us who are looking at these pieces of information.
Yeah. Okay, so we said we'd have a look at some where we are for looking ahead for the summer bookings. We've got some data here from OAG Traffic Analyzer, which has bookings for future months. What we've done here is take a snapshot in April and compare for the next 6 months and compared it to the snapshot of bookings in April last year for the following 6 months. So hope that makes sense. And there's a little bit of caution with some of these numbers, but it does broadly show what we instinctively, anecdotally are seeing in the market. you know, the bookings are up quite a lot. If we look at Australia, April bookings, we're seeing in the system 350% more than they were a year ago. You know, maybe that's no surprise. You know, everything's more open, but it's good to see the numbers here and see the bookings are really doing well. We know the UK is doing well, you know, 333% up in April. And where Singapore has just opened again, April 154% up. So some real responses to opening up happening in the bookings, and these are looking pretty good, aren't they?
Yeah, they are. They are off small bases though, in many cases. But you know, I think it goes to that point about there is increasing confidence, and we should be more positive about how the summer's going to shape out now. And it also shows, you know, that there is just, it's going to be challenging. And I've said this all the way through. If you're trying to book a flight for a holiday anywhere in the Northern Hemisphere, anywhere in Western Europe, you know, and you're having to travel on a Saturday or on a weekend, you're going to find it extremely difficult or extremely expensive to get a fare in the summer months, because demand is going to be so strong. The US airlines in their quarterly earning reports last week were saying that, you know, they expect to have their highest revenue earning summer ever this year. Now, if we'd have said that this time last year, that 12 months on, it, you know, everything would be brilliant, the gardens would look rosy, and the revenues would be that high, would have been laughed out of court. But the reality is the bounce back has been much stronger than we expected, and that, you know, that explains some of the challenges we're having as an industry at the moment.
So we had a question in, and I know we're focusing more on Asia Pacific in this webinar, but why is the US down so much month by month? And we've been wondering that ourselves. I think some of it is just that last year the US was open, Mexico was open, so there was more travel to those places. If we look particularly at Mexico, there was a lot of people, that was where you could go from the US. So these numbers are looking at travel in both directions and both points of sale, and so all travelers on the route. But you know, people aren't going to go to Mexico as much now because they could go last year when there was nowhere else open. They're now going to be looking, if they're in the US, they're going to go to the Caribbean, or they might go to Canada, or they might come to Europe. So in some ways, we can understand the figures being down, and it just reflects what was happening a year ago. And we're going to be going through this, aren't we, for the next couple of years, always having to reference back what was happening at this point last year or this point a couple of years ago. It's you need a little bit of a memory and history to be able to interpret the data, doesn't it?
Ancient history. And I think the other thing is that you know, the US has become conditioned to last minute booking, and that last minute booking is reflected in these numbers. Now, they might find that they won't get the bargain they thought they were going to get, because this time last year airlines were desperate. They're not so desperate for that cash now, for that revenue at the last minute. It's already been booked up.
So I want to have a look now at where some of these bookings are. So we've picked 4 markets here: Australia, Thailand, Singapore, and India. And just the data in Traffic Analyzer comes from Travelport, and this shows the sort of to from markets for those bookings from for each of those 4 countries. In some ways, it's perhaps what we might expect. You know, 17% of the bookings are to and from the UK for Australia, 9% Fiji, 9% US, 6% India. In some ways, these are sort of beginning to return to what we saw historically. Obviously, we're not seeing low-cost traffic represented here in quite the same way, because that's not picked up with Travelport. So perhaps there's less of the regional traffic we're seeing. India featuring in most of these. India is going to be, I think, Gary, you said earlier, India is going to be a really key market, isn't it? And everywhere is going to be looking to win some of these new Indian outbound travelers.
Yeah, for sure. I mean, you look at all 4 of those pie charts there, and, you know, what's the thing that links them all together, and it's China's missing. You know, China is the key market for certainly for 3 of those countries, not India. But yeah, in terms of countries in Southeast Asia, all chasing the Indian market. You know, Thailand is marketing very, very heavily into India right now, Malaysia, Tourism Malaysia did a roadshow through around, I think, 6 or 7 Indian cities last week. Singapore has been very, very effective in marketing into Indian second-tier cities, not just the metro cities, before the pandemic. So, you know, you'd expect the figures there, 2% is quite low. You'd expect that to be a little bit higher in Singapore going forward. But yeah, I mean, everybody's looking to try and replace those missing Chinese tourists in India, given its proximity, the size of its potential market. But you know, Malaysia Airlines was saying a couple of months ago that they'd applied to get all their routes back into India, and it was taking them time to get those approvals. So, you know, this doesn't happen overnight. And you know, doing the marketing into India, even though there are strong connections between India and Malaysia culturally, there's an Indian population in Malaysia, it still takes time for this to feed through. So yeah, it's just that issue of replacing the Chinese travelers.
And what do we know about Indian outbound travelers? I mean, they're obviously not the same as Chinese outbound travelers in terms of what they want, or perhaps what they want to spend. What do we know about them as a travel group?
So different in different countries. So if you go into Singapore or Malaysia, for example, there's a lot of VFR. You know, there's a lot of visiting family and friends. Thailand is leisure. Bangkok is very popular. Vietnam was becoming more popular before the pandemic. So too was Bali. You know, holiday travel. You know, difference that Indian families tend to have more children than Chinese families. You know, there's just one issue there in terms of family travel. There's a lot of extended family travel. But yeah, I mean, in terms of what they're looking for in terms of the experiences in Southeast Asia, I think it's relatively simple. It is relatively similar. What Thailand offers, what Vietnam offers, what Bali offers. You know, that is appealing to all, cross markets. Everybody, you know, likes the same things those destinations have to offer. But yeah, it's a difference in terms of flight times, in terms of flight frequencies. Those are going to be very, very important. If you look back to pre-pandemic, you know, one of the reasons that Chinese market was so successful into Southeast Asia wasn't just the numbers of people that were coming, it was from the different cities that they were traveling from. You know, flights were coming in from various cities across China. So that, you know, that kept demand buoyant throughout the year.
I mean, you know, if you look at India and the way India has recovered and the dynamics, it has the potential, at least for the next 2 years, to be a more important strategic market than China for many airlines around the world, with more and more opportunity coming their way. Ironically, I think, you know, it also, to my mind, is going to make it even harder for someone like Air India to actually re-establish a credible market position and size and scale with the increasing competition they are seeing. It's a really exciting market with lots of opportunity, and, you know, new airports coming on stream, airlines with huge aircraft orders for NEOs and extended range single aisle aircraft that are going to open up new markets, low cost carriers in the Middle East, desperate to serve more destinations in India and the subcontinent. It's going to be the hotspot certainly for the next couple of years.
And one additional market that everybody wants, particularly Thailand, is going after this, and that's Indian weddings, because they are so lucrative.
Yeah.
Right, there's a niche, isn't it? Lovely. Thanks very much, Gary. Okay, we're going to go back to look at China again. So these are charts. We've shown these sort of charts before. We have the ability with OAG data to look at a snapshot of where the schedule was at a previous point in time. And so what we've got here is how the schedule capacity has changed over 5 weeks for each of these carriers. And you can see that each week we're seeing a whole tranche of capacity removed, but only for the next week or two out. And if you go 3, 4, 5 weeks out, what we're seeing in the schedule is something that's significantly higher. And that's why we said at the beginning, we expect this to continue for some time as the travel restrictions and the lockdowns in China remain. So we're going to keep seeing capacity coming out, and all the carriers doing something similar, really. We had a question in from Stella Chu from Reuters about the capacity, and asking, you know, we've seen an increase this week in capacity versus last week for China, but that's just this little effect here, isn't it, effectively, John, that they've taken less out than they took out the previous week.
Yeah, and, you know, the Chinese airlines have been extremely flexible in taking capacity out, putting it back in very quickly. And to some degree, they don't really seem to care whether demand returns as quickly or not. And it probably doesn't because of the natural sort of conservatism about traveling when you're coming out of a lockdown. But they have the resources on hand to do this. Cheng was saying yesterday, you know, Chinese airlines typically did not furlough or lay off employees, but they kept them on working, but with lower pay levels. So the staff are there, and the staff are very keen to work because it means they will get back to their normal pay levels. But you know, it doesn't. You can't ignore the fundamentals of a lockdown. But the airlines are desperately keen to start
That's
flying.
a very different situation. Yeah.
Sorry, go on.
So Cheng, that's a really different situation to what we're seeing in Europe, where, you know, we know that various European airports are really struggling with having enough staff, not just because many are, you know, are off sick with COVID, but also just bringing the staff back in time. But that's not going to be an issue in China, is it? That they can flex their capacity quite rapidly up and down.
Yes, Becca, you're absolutely right. Yeah, so that's not a particular big issue for China. But just further to following up on John's point about capacity, Chinese airlines indeed they can quickly, you know, increase or reduce their capacity. I think another important indicator is daily aircraft utilization. So I actually had a look at last week's figure for Chinese airlines. The daily utilization rate was just 1.69 hours per day.
Wow.
Before COVID, it was 10 hours per day. So you see, there are a lot of capacity, but you know, very few airlines actually, you know, the airlines are losing money, basically.
Mm-hmm.
And also you see China Eastern following the tragic crash that grounded 180 737-800 aircraft. So that's also had big impact on China Eastern.
Yeah, and we've had, you know, it's been well publicized that Shanghai's had this lockdown, and certainly at one point there were 26 million people having to stay home. It would be easy to think that they're just now going to slowly get better and it'll open up, but we're possibly on the verge of seeing something similar in Beijing, aren't we? That, you know, there's been people having to PCR test, I think you said 3 times a week, and there's been panic buying in expectation that they might now get locked down. So just as Shanghai opens, Beijing might get locked down. And as we've seen with Shanghai, if you close one major city, all the air services are affected across the whole country.
Yes, yeah, exactly. And now people in Beijing, so basically, you know, people in Shanghai, they essentially can't leave Shanghai. And you see this both Pudong Airport and Hongqiao Airport, you know, there's almost no domestic flights, and with very few international flights. And for people in Beijing, you know, they just, you know, don't dare to leave the city. If they leave the city, you know, they don't know whether they can really return back home.
Mm-hmm.
So you know, because you know, the COVID situation in China are very fluid. You know, they may change very quickly. If their place has been considered as high risk location, you know, say those people they need to be put into a quarantine or isolation immediately, even when they are outside of, say, when those people outside of Beijing. Yeah, so people, that really affects air travel.
And Cheng, to your point about, you know, really low aircraft utilization, Chinese airlines must be desperate to start reflying and reopening international services because they can't be profitable with the domestic flying and the utilization they're achieving. Is there pressure from the airlines to be allowed to start flying internationally again?
Yes, John, you're absolutely right. Yeah, airlines in China have been very keen to start, you know, international flights. Yeah, I think they've been, you know, communicating with the CAAC, and you know, but the situation is actually beyond the CAAC's control. So it's sort of like the national policy. So I spoke to some, airline friends in China. They say all they can do is to make sure that they can respond very quickly to any policy shift.
Yeah, really helpful. Thanks very much, Cheng. We've got one more slide which we will just look at quickly. We've sort of covered this really, and this was to look specifically at the Singapore and Thailand reopening. So both countries have now said they're going to be fully open to fully vaccinated travellers. And we can see how capacity has, you know, the point it opened, Singapore opened, there's a bit of a boost in capacity, and we're seeing the 1st of May opening in Thailand, a little bit of a boost to capacity here. But it's not a sort of it's the start of a trend, isn't it? It's not in itself seeing masses of capacity added. And I guess that's the thing about, you can't bring it all back at once. You have to bring the capacity back more gradually, unless you're China and you never furloughed any staff.
Yeah.
Yeah, I think there are probably 2 points in terms of Thailand, Becca. One is that, yeah, you're absolutely right. There were, you can see that curve is going up. It's not too steep at the moment. I think one of the interesting things that could happen now is the removal of the PCR test to go into Thailand. That's obviously going to help boost inbound travel, but it may help boost outbound travel as well. Thais that travel outbound won't have to do a PCR test when they're overseas before they go back. But the other issue, and this was highlighted in the Thai media, I think it was last week, there was a survey of potential Thai travelers, and they were saying one of the reasons they are not booking overseas travel at the moment is cost. They're very cost sensitive, and they're not sure whether they're going to be able to afford their flights this year. So, that's something we were talking about earlier. There are these shifts and balances at the moment that the market is trying to recalibrate.
Yeah. Well, so we've given you lots of positive stories today and news, but also there's still lots of uncertainty in the market. And we'll be carrying on doing these webinars for a while, I think, talking about and trying to understand quite what's happening in the market. We'll be back on Tuesday, the 17th of May, so it's a few weeks' time. I know this webinar is slightly later than normal in the month. It's going to be a Tuesday, not a Wednesday, so do put that date in your diary. Let me finish by saying a really big thank you to Cheng and to Gary in particular for joining us today. We always appreciate your contributions and your expertise. So thanks very much, and we'll look forward to having you join us in a few weeks' time. Thank you.
Thanks, everyone.
Thanks.
Thank you.
Thank you.
Thank you.
Thanks.